Joining us today for our webinar on helping Americans weather financial shocks. To kick things off, I'd like to introduce our speakers for this webinar, Maria Lajewski and Laura Cummings. Maria, why don't you start off with an intro? Maybe we're having some technical difficulty there. Laura, are you there?
Yes, hi. I'm Laura Cummings. I'm a senior manager with CFSI, and I was the author of the issue brief on helping Americans weather financial shocks. So I'll be sharing our learnings from that.
Great.
Hey, Saurabh, I think I'm back on.
Awesome. Maria,
hi, good morning, everyone. Yeah, my name is Maria Lajewski, and I'm a manager on the program team at CFSI. I'm based in San Francisco and help manage the Financial Solutions Lab. We're very excited to be launching our second Innovation Challenge and are glad that all of you are able to join us this morning. Next slide. So today we plan to introduce, or more likely reintroduce you to the Financial Solutions Lab. After a quick intro, I will then turn it back over to my colleague Laura to present our 2016 challenge topic, which is around weathering financial shocks. Following that, I'll explain how Innovators can apply to the program, and will then highlight some of the achievements of our first class of FinLab Innovators. As Saurabh mentioned, we will then save about 20 minutes at the end to answer your questions. And as a reminder, you can submit questions throughout this webinar using your GoToWebinar control. Next slide. So at CFSI, our overall mission is to improve consumer financial health in the United States. We believe that financial health is possible when your day-to-day financial system builds long-term resilience and opportunity. And in order to achieve that mission and build financial health, we at CFSI have built a network of providers across the financial services ecosystem. This network includes both the largest banks and financial institutions, as well as some of the country's largest technology firms and some of the most exciting startups and nonprofit organizations operating in consumer financial services today. CFSI works through this network by helping providers understand the market opportunity to improve consumer financial health through our research and convenings, and we directly work with those providers to improve their products through our consulting work. We also seek to catalyze and support the development of innovative new products that push the industry forward through vehicles like the Financial Solutions Lab. And finally, we leverage all of our work with providers to inform and educate policymakers and regulators on the future of financial services. Next slide. So the Financial Solutions Lab is a $30 million 5-year partnership managed by CFSI with founding partner JPMorgan Chase to support exceptional for-profit and nonprofit organizations to develop and test technology-enabled high-quality solutions that improve consumer financial health. Each year, we host an innovation challenge around a specific theme or topic facing consumers. This year, our focus is on helping consumers weather financial shocks, and we then select a class of exceptional high-quality for-profit and nonprofit innovators who have a bold vision for addressing that consumer challenge. Lab participants share a relentless focus on building products and services that embrace inclusion, build trust, promote success, and create opportunity for their customers. Our hope is that by creating a path to scale, we'll induce other providers of financial services, either entrepreneurial founders or established players, to enter the market and compete to improve the financial health of consumers. Next slide. So how we structure the lab. The lab is a virtual 8-month program through which we provide each winner with $250,000 in capital and work with them to identify partnership and growth opportunities, solve design challenges, integrate the latest learnings from behavioral sciences into their customer experience, address technical product issues, and assist with regulatory and legal questions. In addition, we bring the winners together about every 4 to 6 weeks for in-person meetings, peer-to-peer learning, and networking opportunities. Next slide. We're very fortunate to work with some of the industry's leading experts to provide mentorship, guidance, and technical assistance to help the lab winners improve their products and build stronger companies. Our operating partners include IDEO.org, a leading human-centered design firm, and Ideas42, a leading behavioral design lab. We're also fortunate to work with 2 law firms with deep financial services expertise, Paul Hastings and Brian Cave, and with Promontory and First Annapolis, 2 regulatory and compliance consultancies that have experience working with the largest and most prominent financial entities. Next slide. Now I'm going to turn things over to my colleague Laura, who will walk through this year's challenge topic.
Thanks, Maria. Our 2016 challenge is helping Americans weather financial shocks.
What are financial shocks? Financial shocks are unexpected expenses and drops in income, and they happen to everyone, but the results can be devastating. We are looking for innovative financial products that can prevent, avert, or mitigate the all too common financial shock. Last year, our challenge was household liquidity, the difficulty of cash flow management given the prevalence of spikes and dips in income and expenses. This year, our focus is financial shocks, the jumps in expenses or the drops in income that occur on top of already volatile household finances. I will use a family from the U.S. Financial Diaries, the Johnsons, to illustrate. Next slide. The U.S. Financial Diaries is a research study that aimed to better understand the financial lives of low and moderate income households in the United States. This study is unique because it combines high-frequency economic and financial data with in-person interviews that were conducted every 2 to 4 weeks over the course of a year. Every dollar in and out of a household was tracked for an entire year, giving us a unique picture into the household's financial lives. So let's meet the Johnsons. Sam and Sarah Johnson are a hardworking Ohio couple in their 30s and 40s with 3 dependent children, 2 adult children from previous marriages, and an 8-year-old daughter. They have regular full-time and part-time jobs. In addition to their volatile income, they had frequent unexpected expenses or financial shocks, including home and car expenses and health issues, which made it hard to make ends meet. They are not highly satisfied with their financial situation and they want better. So Sarah is pursuing her bachelor's degree part-time as well. The Johnsons live just at the edge financially and sometimes beyond their means, juggling bill payments and using short-term credit to smooth their consumption. Their situation makes it hard to plan. In the past, when money has been tight, they downgraded their food choices or they delayed taking prescription medicines. They use a wide range of financial products, including bank accounts, and they have plenty of debt, both for large expenses and to help make ends meet, and they use informal borrowing as well. They do not have any savings, though. They do receive support from friends and family. Sarah's mother has given them furniture, clothes, and a large loan that she does not expect to be repaid. A friend watches their daughter after school most days without compensation. And as for health insurance, while they have employer-sponsored health insurance, the family has accumulated unpaid medical bills. They have a lot of debt, and Sarah spends a lot of time and energy trying to keep the family afloat financially. Next slide. As for income, the Johnsons receive many different income sources, including Sam's employment streams from selling electrical equipment, coaching, and being a receptionist at a gym. Sarah works as a full-time bookkeeper and also an athletic assistant. Sarah and her son also receive tuition grants, while she is pursuing her bachelor's degree and her son is a freshman in college. Her education grant causes big spikes in income when it comes in, but income also varies due to other factors. For instance, Sarah's ex-husband has to pay her about $200 each month in child support, but he sends only an average of $50 a month. During the summer, she didn't receive any payments, and then in September, she got $1,200 because her ex got his tax refund. Also, Sam missed 3 months of work while he recovered from knee surgery, and during his disability, he only received 2/3 of his normal pay. Finally, their part-time employers don't consistently pay them on time. Next slide. During the year that the U.S. Financial Diaries followed the Johnsons, they went through some significant events or financial shocks. Some impacted their income, such as the pay reduction that Sam went through when he was recovering from knee surgery, and some were on the expense side. Only about 20% of their monthly expenses are fixed, like the mortgage, car, and insurance payments. Other necessities like gas, utilities, food account for about half of their expenses, but those vary from month to month. In September, there was a huge spike when they bought a new car because their old one had become unreliable, and they also spent $1,500 in September to repair a major leak in their roof. They also replaced rugs and furniture and bought an air purifier that month in hopes that it might help with their daughter's asthma. They have also had health emergencies that have resulted in their medical bills. Sarah had her appendix removed along with a CT scan, which cost $1,000. Sam had foot surgery, which cost $800, and their children also had their fair share of expenses. The Johnsons' financial shocks from home repair to healthcare expenses occurred despite their insurance coverage, and they were expenses most Americans can expect to face. We just don't know when or how much they'll be. And the Johnsons have access to financial products, maybe too much access because they carry a lot of debt. Keep the Johnsons in mind as one example of an American family struggling to find financial stability among numerous financial shocks and volatility. Next slide. We did not choose our challenge topic solely based on the Johnsons' experience, though the U.S. Financial Diaries do give us powerful research tools to check our assumptions and to uncover new insights. Selecting the Financial Solutions Lab Challenge began by tapping CFSI's wealth of knowledge on U.S. consumer needs. We collected over 40 ideas from the CFSI team, from short-term lending needs to the auto loan market. The topics were researched and evaluated on their lab's ability to attract applicants who would have a significant impact on the challenge. Our advisory council, which includes members from the University of Michigan, IDEO, Ideas 42, CFED, and CFE, as well as the JPMC Institute, they all weighed in, providing invaluable industry experience and insights. And simultaneously, the Pew Charitable Trust released important findings from their American Financial Security Survey, showing the dramatic effect of financial shocks on families' household finances. So why was financial shock selected as our challenge topic? Because financial shocks are so common. The Pew study found that 60% of Americans experienced a financial shock in the past year. And financial shocks are harmful. Pew also found that 55% of households who had a financial shock found it hard to make ends meet. And together that means that 38 million households had a financial shock that made it hard to make ends meet. We also know that the causes of financial shocks are really varied and require many different solutions, which we welcome in this challenge. Next slide. Where do financial shocks come from? really all aspects of life. Financial shocks can come from all angles, including life changes such as divorce, changes in employment, car or home repair expenses, health events. Despite knowing a big event expense is on the horizon, the true cost of a purchase can be hard to estimate. This means financial shocks can also come from the more predictable changes in life, such as buying a house or sending a child to college.
We asked Americans what they would do if they needed to come up with $600
within a week as part of our consumer financial health study. Half, 50%, responded with some type of borrowing, whether it be lending money from friends and family, using a credit card, or getting a short-term loan. So many answered with borrowing because savings are just not an existing source of funds for many families. Income in is already accounted for to cover for all their existing expenses. Pew's recent survey found that the typical household's most expensive financial shock was $2,000. Not their only shock, but the average household's most expensive shock, and that 41% did not have the liquid savings available to cover that shock. We're going to do a poll now to see what your thoughts are on the products and services that can help consumers weather financial shocks. So if you see on the screen our quick poll, in terms of products and services that can help consumers weather financial shocks, where do you see the most significant gap? Your options are savings, credit, insurance, or informal methods. And we'll give you a minute to answer that.
Great. Thank you, everyone, for participating. So savings is definitely an area where Americans are having difficulty. We see 46% of respondents selecting savings. And then credit follows with 23% of respondents, and insurance and informal stayed neck and neck. So when we looked at all these potential solutions, we definitely found them lacking. As I pointed out before, for savings, American savings rates are dismal, both by objective measures or surveys. We know we're coming up short. Only 7% of the U.S. Financial Diaries families said that they were meeting their own savings goals. So this prevalent lack of savings removes the financial shock absorbers that one would have and leaves families searching for options when financial shocks strike. On the credit front, 108 million Americans lack access to mainstream credit products. CFSI found that 32% of consumers who use small dollar credit, products like payday loans, auto title, and installment loans, they do so for unexpected expenses, otherwise known as financial shocks. While these short-term loans are accessible regardless of your credit profile, small dollar credit products are typically more costly than mainstream credit because of their fees and high interest rates. On the insurance front, we all know the frustration of having an insurance policy that feels like Swiss cheese of coverage, full of holes and exemptions. And to keep premiums low, consumers may opt for a high deductible policy, but that leaves them looking to savings and credit to cover their deductible. The timing of when insurance payments are made can also compound the stress of financial shock, leaving the consumer with the burden of floating funds. And finally, informal borrowing is a common source of funds, but friends and family just might not have the funds needed. CFSI has found that the underserved Americans represent a $138 billion market for financial products. The savings, insurance, and credit options available today, though, are far from perfect. The $138 billion number doesn't even include insurance. So there's a huge opportunity for providers of all types to chip away at this market by offering products to help consumers build resilience and withstand life's surprises. Next slide. The big opportunity that we see is to build financial products that support financial health. Financial health is when your day-to-day financial systems help you build resilience and take advantage of opportunities. The 2016 Financial Solutions Lab Challenge is helping Americans weather financial shocks because so many Americans experience not only financial shocks, but also their detrimental long-term negative impacts. Americans typically turn to savings, insurance, and credit when faced with a financial shock. So these very tools that present opportunities for innovation to better meet the needs of consumers.
Alrighty, great. Thank you so much, Laura. We're going to pause right now to take a look at questions, and I encourage you to use this time to submit some. Laura, question for you. This is from one of our audience members. Seniors are most at risk for financial shock. Which kind of inclusive financial services do you foresee for seniors?
So I totally understand the concern with seniors because they're facing maybe fixed income or a very strict budget. And so any unexpected expense or change in their financial situation would be very difficult to accommodate. And any savings would also be difficult to accumulate if you're living off your savings already or don't have a lot of leeway to build up a savings cushion. So that makes me think credit and other kind of planning devices would be very helpful. Credit to, of course, help someone spread the expense over time. And planning to just help understand that a fixed budget is a starting point, but that unexpected expenses are actually knowable and something to expect and incorporate into one's budget and plan.
Great. Thank you for that, Laura. We'll turn back to you for some more questions at the end of the session, but how about we turn things back to Maria to explain how innovators can apply to the FinLab.
Great. Thanks, Saurabh and Laura. So we're looking for exceptional, high-quality innovators, regardless of tax status, who both share our mission and commitment to consumer financial health, who are building high-quality products to help Americans weather financial shocks, which again is the theme of this year's challenge, and have a product in market with users and can demonstrate how they would benefit from the lab's resources. We're really looking to identify the future leaders of financial services so at the end of this 5-year initiative, we have a new generation of leaders in both the for-profit and nonprofit space who are objectively improving the financial health of their customers. Next slide. So to apply, you can visit our website at finlab.cfsinnovation.com and follow the application link. Applications opened a couple of weeks ago and will close on Thursday, April 7th at 11:59 p.m. Pacific time. Next slide. Once our application period closes, we expect to identify semifinalists by mid-May and we'll schedule a follow-up phone call or site visit at that time. And then in late May, we'll identify approximately 15 finalists to attend a final selection event that will take place during CFSI's Emerge Forum in New Orleans. While the selection event will be a private forum, we will be publicly announcing the 2016 lab winners on the conference main stage on Thursday, June 16th. And for those of you who are less familiar with CFSI's annual conference, every year CFSI's Emerge Forum brings together over 700 banks, credit unions, other financial services providers, and fintech innovators for networking, to generate ideas and explore new financial services strategies to improve the bottom line and consumer financial health. This year, it will take place from June 15th through the 17th, again in New Orleans. And for the listeners of today's webinar, we'd like to offer a special discount code of $100 off the registration price by using the code FinLab15. Next slide. So now let's talk about why innovators should apply for the Financial Solutions Lab. Next slide. Through the lab, we try to give lab winners every possible advantage we can to improve, grow, and ultimately scale their products. From the lab's first class, and really our applicant pool at large, we heard that access to industry and distribution partners was one of their single biggest challenges. So over the course of the lab's first year, we, along with JPMorgan Chase, were able to make hundreds of customized introductions to industry leaders across the ecosystem on behalf of the lab companies. And in many cases, these introductions would have been impossible or would have taken much longer for the entrepreneurs to accomplish on their own. So for example, when Even was interested in connecting with regional banks and credit unions, CFSI was able to help him secure meetings in even less than 48 hours with the senior executives of 5 institutions in the CFSI network. Another example is that by working closely with Colleen Briggs and her team at JPMorgan, we were able to organize a full day in New York City of mentoring and advising with over 40 of the bank's most senior level executives. Lab members were able to receive feedback on their investor and partnership pitches, learn how banks source and vet third-party partners, and get one-on-one feedback on various strategic questions from senior JPMorgan executives, which provided incredibly valuable insights. Another advantage the lab provides is helping the lab members anticipate and adapt to the changing regulatory landscape. So one concrete example of this is a meeting that we hosted for the lab companies in Washington in December. We met with the National Economic Council at the White House in the morning. We then hosted a closed-door luncheon with over 40 prudential regulators and law enforcement bodies in the afternoon. And then we held an evening reception on Capitol Hill for other important stakeholder groups, including some of the largest nonprofit and civil rights organizations in the country that often have the ear of policymakers. The ability of the lab companies to candidly share how the current regulatory environment is impeding their ability to improve and expand upon their products to reach more consumers was unprecedented. In turn, we were able to help give these regulators and policymakers a window into innovations that are also good for consumers. Just a couple of weeks ago, we graduated the first class of the lab into the CFSI network, and I'm happy to report that since joining the program, the cohort added 140,000 new users, and their teams have doubled in size on average. And together, they're on track to raise $90 million in investment since last April. At our grand finale event, each of the lab companies had a few minutes to speak and reflect on their experience in the lab. And company after company spoke about the power of this program and CFSI to help them grow, build better products, and build the financial health of their consumers. And I just wanted to share a few of those direct quotes with you. From Ethan Block, founder of Digit, FinLab and CFSI have given us an unparalleled opportunity to work with executives from the largest banks in the country along with government and regulatory bodies. This access has been phenomenal, as it has allowed Digit to be involved in conversations directly impacting the future of fintech. From Sherry Atwood, founder and CEO of SupportPay. I was in corporate America. I've been to 1 million events before FinLab. Compared to any other group I've been in, they are incredibly responsive and supportive. It's been a great experience. And from Jimmy Chen, founder of Propel. The lab was instrumental in helping us grow our business and providing the expert insights we needed to expand our solution to more underserved consumers. In fact, the newest iteration of our product was inspired by collaboration we developed through FinLab. Next slide. So I like to close by sharing just a couple of anecdotes demonstrating the impact of the lab companies on their end users. In New York, 22-year-old Sean had been using a savings app called Even for about 8 weeks when he realized something that surprised him. By automatically saving his higher than average income, he'd saved up enough to pay off a $2,500 in credit card debt that had been hanging over his head. And in a California suburb, Miranda, a single mom, uses SupportPay to regularly exchange money with her ex-husband for child-related expenses. Putting the transactions online and taking financial tensions away from her 2 young sons. We'll continue to track how the lab companies are helping improve their end users' financial health. The lab companies have committed to report back to CFSI on a set of customized impact metrics every quarter. So for updates and for more information, be sure to follow our handle at Financial Solutions Lab on Medium. Next slide.
Thank you very much, Maria. Great to hear about the lab and what that first cohort was able to accomplish. In addition to our Medium handle, you'll see listed here other ways in which you can connect with us through our website, email if you have any questions about the application. Feel free to write to this address, finlab@cfsinnovation.com. And you can find the FinLab on Twitter, and we hope to see you guys engage with us. So now we're going to jump into a Q&A, and we've gotten some questions, and I want to encourage you guys to continue to submit those. But let's start off with Maria. You were just talking about how there was, phenomenal user growth amongst the companies who are in the lab. We got this question: what is the experience of the last FinLab awardees in terms of measurable progress towards their goals? What was their biggest impact? And obviously reaching consumers is a huge impact, but do you want to speak to this a little bit more?
Yeah, thanks, Saurabh.
Do we still have you there, Maria?
Sorry, I think I accidentally muted myself again. What CFSI was really able to provide to the lab companies that was really instrumental in helping them achieve specific business metrics and help grow their business were those connections to industry leaders. And so as I mentioned, we were able to help connect them to regional bank partners, credit unions, senior leaders at JPMorgan Chase, different providers across the ecosystem that they were trying to gain access to, as well as the nonprofit partners who could serve as distribution channels. And so that was something incredibly valuable that both CFSI and JPMorgan were able to provide back to the companies, and where I think the companies saw the most impact from participating in the lab.
Great, great. And this is a question more related to the challenge topic, so I'll direct this to Laura. The question is, do the financial shocks that we're talking about here include the impact of the financial market crisis, particularly to retirement incomes?
Yes, so our definition of financial shocks and those that we found in other research and the public understanding of financial shocks would definitely include effects on the financial markets or investments that individuals have, because that's going to affect their income. So they may have been thinking they were going to draw down $1,500 a month. Now they're looking at what their investments are returning, and they're going to have to really change that. That's a huge financial shock. So absolutely, changes in people's assets that they can draw upon, as well as how that affects their income, are within the scope of what we consider financial shock.
Great. Thank you for that clarity. So this is a question more about the application process, so I'm going to direct it to Maria. The question is, how much progress should the venture have made in order to apply? How many team members should the venture already have?
Yeah, great. So everyone is eligible to apply, granted your product or your service is serving U.S. consumers, and that you're eligible to work in the U.S. Our selection criteria does tend to favor organizations that have a product in market. Even if you're in a beta or a pilot stage, that's fine. Team size doesn't really matter to us, although we do expect the founder or the CEO to be our primary point of contact and fully participate in the lab's activities. Last year, for example, the companies we ultimately selected were at various stages. One company had one full-time employee and had raised very little capital. Others had much larger teams and had raised upwards of $1 million of seed funding. So the average team size for applicants last year, and again, we had almost 300 applicants apply last year, the average team size is about 6.5 people, and the average amount of external capital raised was just about $600,000. But again, those are averages. We're not specifically looking for certain benchmarks. We're really looking for that you, as the founder, have a bold vision for helping Americans weather financial shocks, that you can serve U.S. consumers, that you have a product in market.
Okay, great. And to that, Maria, are there any factors that would exclude an applicant?
There aren't many factors. We will run through some background security checks as mandated by JPMorgan Chase during our diligence process, during our selection window. But there are very few factors that would not allow an applicant to participate in the lab.
Okay, great. Here's another question for you, Maria. If you're not selected as a winner, is there still an opportunity to be accepted into or incubated or helped by the lab?
Yeah, that's a great question. The focus of the lab is not only to work with, 8 or 9 innovators each year. It's really to support this broader ecosystem of new innovators who are working to improve consumer financial health. Something new that we're trying out this year is building partnerships with a few accelerator programs who work a little bit more earlier stage than we're looking at. So maybe pre-product, working with companies with just an idea. And so for applicants that come to us that may not be quite the right fit for what we're looking for, we do have kind of this these partnerships built where we can directly refer you to others who may be a better fit for you at this time. And then hoping that once you kind of run through their programs, you may be a better match and stronger and able to take advantage of the lab's resources. Beyond referring you to other accelerator programs, we are actively looking for ways to continue to work with and engage the broader universe of fintech startups and nonprofits that come through our application channel. Last year, we had some opportunities to invite a few additional finalists to attend our Emerge Forum, which is a great opportunity to network with other industry leaders. We host meetups and events and other meetings around the country all of the time. And so if we're in your market, we're going to do a better job of trying to reach out and connect with you. And then finding other opportunities just to stay in touch and to find ways to kind of support your product, what your business objectives are. We're even thinking about how can we extend the mentorship and the resources available to the winners to our broader applicant pool. And so definitely stay tuned to the Financial Solutions Lab. Once you apply, we'll have all of your contact information so that we can reach out to you and explain a little bit more about what those additional opportunities are.
Great. And Maria, we've got a couple questions asking about where the FinLab lab sites are. Do you mind just speaking to the audience about how this is a virtual program and where we actually are based?
Yeah, definitely. So the Financial Solutions Lab is based out of the Center for Financial Services Innovation, a nonprofit organization. That nonprofit is headquartered in Chicago, but we have offices in San Francisco, DC, and New York. Financial Solutions Lab is just one program of many that we manage, and the lab itself is virtual in scope. And so we accept innovators from across the country to participate. We don't require anyone to move to a certain location to participate in the lab. Instead, we will bring together the lab participants about every 4 to 6 weeks for in-person meetings. But otherwise, you know, the lab innovators are welcome to work from wherever that they're currently located. The lab team is largely based out of San Francisco, but that doesn't mean that we either require innovators to move out here or that we focus most of our events here. We do actually a pretty good job of even hosting our meetings in other cities around the country throughout the program.
Great. And another question for you, Maria. Are there any stories of FinLab class companies completely changing their offering based on, you know, their experiences in the program? Did you see any big changes in the products of the company?
Yeah, that's a good question. One immediate example that comes to mind is with Propel, who's making it easier for individuals to apply for food stamps, which is a very cumbersome paper-based application process usually, and he's trying to bring that application process to mobile, and providing a much more user-friendly interface. But what he actually found throughout the program was that allowing individuals to apply for food stamps via a mobile app wasn't enough. Users actually wanted more information. They wanted to be able to easily check their balance, find out how much they had left to spend, how much that they had used. They wanted more visibility into how they were managing those funds. And so it was throughout the program that he, you know, had come to some of those realizations from working directly with his user base, and CFSI was able to kind of help him structure that feedback and help him iterate on additional product features he could layer on to the initial iteration of what he had built. So that's one example of a founder continuing to iterate on what they had originally designed based on deeper consumer insights. And we were able to kind of leverage our support resources and some of the other mentors in our resource pool to help him do that most efficiently.
Great. Here's a question for Laura as the primary researcher. Was there anything that surprised you when you were researching this topic of financial shocks?
I think most surprising was the frequency of financial shocks for any family. So when I first heard financial shocks, I thought, oh, those really horrible events that you hope never happen, like the death of a family breadwinner or, you know, really awful bad luck. But what we really saw is that financial shocks happen more often than not in the course of a year. And that because Americans are so financially stretched, these bumps, let's say having to replace your roof or having a change in your work hours that cuts your income is really detrimental and throws everything off of balance. So definitely the impact, the frequency, and then the impact that this has on Americans.
Okay, great. And Laura, I've got a question a bit specific to solutions to shocks, and this is about lending circles. The question is, immigrants by the millions are part of saving circles where they save a lump capital that enables them to deal with financial shocks. How do you think regular payment into these groups can help build credit scores, and how do you think they could be used by non-immigrant communities?
Yeah, lending circles are really interesting, and I think a great fit for what we're talking about here is everyone contributing, and then whoever needs to accommodate a financial shock having that asset to pull upon. So in terms of credit reporting, I would point to Mission Asset Fund that CFSI has worked with in the past, and they've found a way to partner in order to do credit reporting. So in order to make these lending circles also a credit building initiative. So that's really exciting because it's a great resource to begin with, and then the ability to have credit building and to build your credit score so that you have access to traditional credit in the future if you need larger, or if you want to go for a mortgage or something like that. It's really great. And the second part of the question, non-immigrants. Yeah, so I think we'd really like to see ideas around that, around how to build some infrastructure and get other communities who are not familiar with lending circles to participate, because it would be an exciting solution for financial shocks.
Mm-hmm. And Maria, would you have anything to add on Rosca's having worked with Puddle on this topic?
Yeah, definitely. I was just going to say that one of our lab winners from last year, Puddle, has brought kind of the in-person lending circle model online. And so what's a little bit different about what they're doing is that instead of waiting your turn to receive that pot of money, you can access funds from peers in your network or those you trust immediately, which is nice and a different approach, because when you do have a financial shock, you know, it may not be your turn in a traditional lending club or a lending circle to receive those funds, you know, not exactly when you need them. And so what Puddle has done is has allowed you to put in, you know, a small amount of funding into this digital lending circle, and it's made available to those in your network, and then in turn you're able to borrow from those that you also trust and build community with. He has seen that this has been popular, especially among people in communities like Lyft drivers or Uber drivers, who may not, you know, initially know others in that community in person, but by having kind of that similar work experience, they're able to kind of build those connections a little bit more easily and grow their networks faster online. And then others invite people from their social networks to join and find and connect with others on the platform itself. So that's been kind of an interesting, innovative way to kind of modernize the lending circle model, and also get it to scale faster by offering it on a digital platform.
Great. Alrighty. Maria, question for you. You know, having just completed the first cohort, what were some of the biggest learnings for the Financial Solutions Lab?
Yeah, it is really, really difficult to build a financial services company, especially given kind of the regulatory complexity that our companies are dealing with. And so we were fortunate early on to bring 2 law firms with really deep financial services experience as mentors and resource partners. Brian Cave and Paul Hastings have been instrumental in helping some of our companies navigate those waters. In addition to Promontory and First Annapolis, I had mentioned earlier, to also help our companies kind of adapt and anticipate regulatory concerns and challenges that they may be facing down the road, and also help them communicate to investors how regulations may affect their businesses. Investors can be very skeptical given the complicated regulatory nature in which these startups are operating in, and may see them as too risky. So it was really, really instrumental that we had these law firms and these other consultancies to help our companies navigate some of those complexities.
Right.
And I think was there a second part to that question?
Well, I do have a follow-up to that. You know, with those lessons in mind and with this new challenge topic, how are you seeing this year's Financial Solutions Lab Challenge to be different from the first, and how do you see the offering being different from the first time around?
Yeah, definitely. So we're modifying some elements of the program structure, although the bulk of it will remain the same. Some of the changes include how we are enabling our lab companies to access some of those mentors and resource partners. We'll be offering more office hours that our companies can take advantage of when they need it, and thinking about how we bring in the resource partners into each of the meetings where we're bringing the lab companies together in person. And so doing, you know, a better job of kind of leveraging the cities that we're in and the partners that we work with to create more opportunities for that face-to-face time to connect. We're also, you know, even though we're a virtual lab and only, I think last year we had 6 in-person meetings, and even that was still a little bit too burdensome for some of our lab companies, so they wanted less travel. So we'll probably reduce the number of meetings we have by 1, and maybe consolidate some of the other offerings that we're providing just to make travel a little bit less burdensome. But overall, the program structure will largely remain the same. And of course, our challenge topic has changed. Again, we'll still be looking for solutions to help consumers kind of manage the day-to-day, but also taking that longer-term view and also helping consumers weather financial shocks.
Great. All right, just time for a couple more questions. This one is for Laura about how consumers perceive shocks. So the question is, how much do we know about consumers and how they frame financial shocks? Some qualitative research among UK consumers found that people experiencing insurance premiums were experiencing insurance premiums as unexpected costs as they didn't budget. And equally, some consumers whose fluctuating income would suggest they will mentally account for bank changes as expected costs at points in the year. So I think basically they're asking, you know, income fluctuations and other, you know, reoccurring costs can be perceived as shocks. Laura, do you have any thoughts around this?
Yeah, so I think that's a good point. When we think about financial shocks, we can think about how they're experienced differently, person to person, family to family. We saw last year that household volatility is really an issue for so many families, and that it causes so much financial stress in trying to accommodate all the volatility. Similarly, financial shocks come in on top of that volatility, and some families may have coping mechanisms and expectations so that changes are not really experienced as financial shocks. They're experienced as the expectation. And then you may have a household who's used to a lot of stability, and then a big change really disrupts that. we were talking earlier about the seniors and how susceptible they are to financial shocks. So I think they have to really be viewed within the larger context of the family's and household financial lives.
Great. Alrighty, I think just because of time, this will be our last question. So this one is for Maria. What sort of priority is placed on innovations that generate high or low financial value return?
Sure. So I think this is kind of where the lab is a bit more different than other typical accelerator programs. We are much more interested in companies that have a deep understanding of their end user and understand their financial attitudes, attributes, and behaviors, and are focused on delivering the best product they can to meet the financial challenge that their users are facing. Oftentimes, early stage startups, that means that you're not receiving a high value financial return, and that's okay with us. We think that the more that you have that strong product market fit, the profits will come, and the value will come. But we're definitely more focused on how are you impacting the financial health of your customers? And how do you know that you are making a measurable difference in doing so? How are you tracking that? How are you thinking about that? And building trust is incredibly important, especially if you're leveraging technology and trying to provide a product or service online where you don't have that in-person, face-to-face communication. And building trust takes a lot of time. And so that's why the lab is here. We can be working with you during those hard times to build your user base, to build trust, to really understand your customer so that you can be a sustainable business and eventually profitable as well.
Awesome. Alrighty, well, thank you so much, Maria. Thank you, Laura. And thank you to all of our attendees for joining today. We had great participation and received some excellent questions. Please reach out if you'd like any additional information about the Financial Solutions Lab, the companies in our first class, or most importantly, details around our newest challenge. And Innovators, we encourage you to apply. With your help, we'll be able to get the best and brightest solutions out there that can help really improve the financial health of Americans. And a quick note before you guys log off, there will be a very short survey to fill out, so we'd really love to hear how we did, and if you have any other suggestions or recommendations for us. Well, thank you, and hope to see you guys connecting with us further about the Financial Solutions Lab in the 2016 chapter.